The coronavirus has brought a lot of firsts, none as stark and shocking as this perhaps. Oil trading in the negative, below zero. What does this even mean? Well, here's what it means. Traders are paying buyers to take the oil off their hands. So you get both the oil and the cash. You're paid to take oil. This should sound good, but it isn't. This has happened for the first time in history, perhaps. This story is about the US oil benchmark. It's a bit technical. We'll try to keep it simple. So we've broken it down into 5 questions and answers. Question number 1, why did the oil prices crash? Here's what happened yesterday. Monday was a really bad day for the oil markets. The price of 1 barrel of oil hit about $20. That's about 1,600 rupees, $20. 1 barrel has 159 litres of oil. So you can say that oil prices fell to 10 rupees a litre. But the benchmark for US oil witnessed something that was unheard of. This benchmark is called West Texas Intermediate. Here the oil prices fell into the negative. And that's where it stayed. Oil ended the day around $30 below zero. Now, this benchmark is a point of reference for American traders, an indicator for oil prices. In America on Monday, traders looked at it with horror. The graph fell below zero. Traders were stuck with barrels of oil and nobody to buy it. Oil used to be considered gold. Right now, it's worthless. Question number 2, why is this happening? Why are the global oil prices falling? There are a couple of reasons. Reason number 1, the demand has dropped. The world is in lockdown. People are at home. They're not driving. They're not flying. Factories are shut. So there is no demand. The second reason is this. The battle between Saudi Arabia and Russia over oil prices. They reached a truce, but it came too late. They agreed to cut oil production a few days back. But before their agreement, companies kept pumping the market with oil. Now there is a demand-supply mismatch, so oil kept coming, but it wasn't being used. The result is this. The world has more oil than it needs, so the prices have collapsed.
So we've had oil demand collapse. People are driving less. No one's flying anywhere. So we have a lot of extra oil supply that's simply not being used. And that oil has to go somewhere. So if it's not being used, it has to go into storage. But there is a limit to how much oil the world can store. And we're bumping up against the limits of storage capacity. And so today, we saw the price of oil go negative.
So oil prices are falling. US traders are paying people to buy oil. Does this mean that you get paid to fill up your tank? That's question number 3. The answer, I'm afraid, is no. You don't get paid. That's not how it works. The price of crude oil has dropped. That does not mean a fall in the retail prices. This is crude oil. The crude fall was in something called the futures contract. What's a futures contract? It's an agreement to buy or sell something at a future date. It doesn't directly affect retail consumers like us. And the drop in America does not affect prices in India, not necessarily. India imports the Brent crude. Its price is low, but it's stable. Having said that, prices in India could drop if this trend continues. Question number 4. What does the price drop mean for the Indian economy? Well, it's good news, but not necessarily for you and me. For the importers, oil is cheaper. India can import oil for less money. The government can consider stocking up the reserves, but the retail prices may not see a major drop. 2 factors decide the price of oil in India, the retail price, the price that you pay. The price of the rupee against the dollar is one factor, and the 15-day average prices is another. The rupee has fallen to record lows against the dollar. $1 costs around 77 rupees, which means that importing oil is going to cost more. It's up to the oil companies then, or the government to decide if they want to pass on the benefit of low prices to you and me. They can do so by cutting the retail prices or cutting the taxes. Question number 5. What does this crisis mean for the world? For importers, more oil is available cheap. They can buy more at throwaway prices. But this price fall is bad for business. Exporters are going to struggle now. In America, if the prices fall further, businesses could shut, people could lose more jobs. Major exporters like Saudi Arabia, of course, are going to be taking a big hit, but they might be able to manage the shock. Russia is feeling the pinch already. The ruble is losing its value, and the situation might not improve anytime soon.